Delano, I heard Brian's report here on what's happening with the energy crisis in Europe. Do you feel as though there was some kind of at least positivity drifting around that story, that a little bit of gas was flowing through Nord Stream?
Dom, thanks for having me on. Fascinating story from Brian and reporting over there. I think, the big thing I was focused on was earnings. I think there is a little bit of positivity coming from that story, but the big thing I was focusing on was corporate earnings domestically and what was going on. As you just mentioned, all three indexes are above their 50-day moving average. And the NASDAQ yesterday had its best percentage move since June 24th. So I think, a big part of that was how companies are able to manage costs right now and net profit margins, even looking out, projecting the next 2 quarters from analysts, it's showing that they're still going to be high. And in a high inflationary environment, high cost environment, seeing different geopolitical things happening across the globe, for companies to still report strong earnings, I think the investors needed that and needed a solid story and theme for us to actually have a positive day. And that's kind of what we did yesterday. And we're showing, a little bit early this morning that we're slightly holding on to those gains, but we'll have to see how it plays out for the trading day.
Delano, it sure sounds like you're positive, at least a little bit, maybe even constructive on the markets right now. You seem more bullish on the fundamentals picture. That being said, if I'm reading you correctly, what are you buying? I mean, what do you go into? Is it Netflix? Is it all clear? Is it technology? Is it still oil and gas? What is it?
Yeah, Dom, you're 100% more positive, and that's because of the value right now. The forward P ratio of 15.8 times the S&P, which is below the 5-year moving average for the forward PE. Those are solid signs for people that are looking for value in the market. And obviously, we keep mentioning that, near term, we're still in a rate-raising environment. We're still moving liquidity out of the market. There's going to be, rough times still ahead for growth and tech investors. But, as you mentioned, I'm still buying, still staying defensive. We're still raising cash. We're still holding on to our long growth positions and adding in certain situations. And if you want to continue to stay defensive, of course, energy is there and healthcare is there for investors. But, it's really, more to be seen. Patience is really a virtue here in this certain kind of market because there's more of an economic backdrop that still spells some potential trouble ahead.